Growthpoint emerged from the Investec stable and owns and manages properties in South Africa, Australia, including the V&A Waterfront in Cape Town.
Yes, that's their flagship property, and of course that does exceptionally well, and it's been a brilliant development for them. They've also done a bit of hoovering up of smaller players, bringing them to the leading market cap on our list
which
today.
is 74.3 billion rand, trading on a historic yield of 7.2%. Let's have a look at the share price graph first.
So this will reflect what Nick was talking about earlier. So there's a couple of things going on here. There's the sense that maybe the economy is a little bit tepid. There's the sense that maybe we are on the brink of a little bit of a anxiety point relating to, you know, our sovereign bonds and the ratings thereof. The rand has been very volatile, which has got some impact on inflation, interest rates. So you can see over 5 years they've gone sideways. But
and
remember,
the current sell-off that we're seeing
yes, on the far
chart.
right there, and that comes in the last few days. But remember, in this period, you've had lots of cash distributed to you, so that's the reason for holding them, I suppose.
Is it the reason for holding them?
Well, Growthpoint, one of the good things I can actually say about them is that they are actually quite conservative with their management style. Their loan to value of their properties is actually right on the lower end. They have a distribution growth that's quite consistent. It's around about 7% per year, slightly above inflation. So it's not fireworks out there, but it's a good, consistent, large cap property company. And interesting, they've just exposed themselves to more international property through Global Worth, which as far as I recall is based in Romania. So it'll be nice to see exposing themselves there. The Australian side is big for them as well. And yes, the rand can hurt them with that, but they do hedge that out. So yeah.
And Australia operating in a relatively stable economic cycle?
Well, I think recovering, if you have a look at the recovery in resource prices, you know, Australia is similar to us in that side of their economy, but they managed to benefit far stronger from that than we do. You know, they've really invested in the primary part of their economy, which is still resources. So we are seeing a recovery in their economy and potentially a stronger Australian dollar going forward. So I think from the Australian side of things could get a lot better for them.
Paul?
70 billion rands worth of market cap. Property values in aggregate, I don't know, probably somewhere around that order of magnitude, maybe a little bit higher, a little bit lower. So this is a big player. What they do is, like, you know, that fancy new Discovery head office, which is being built at the corner of Santon Drive and Rivonia Road. Massive building. That's a Growthpoint asset. They will have funded that through bank and commercial mortgage finance, and then obviously Discovery comes in and signs, I don't know, a multi-year lease. So this is just a business under Norbert Sasser with its great management team that will just go on building and building and building.
Well, that's great. Glowing report, but why have you never been tempted to buy into this business that you hold in such high esteem?
Because to some extent, why would you own them? You'd own them if you wanted that solidity and you wanted that income. We're not really interested in income. We're interested in transformative investments that double today and double tomorrow and double the next year.
So sorry for you, Norbert Sasser, you're not a transformative investment in Paul Theron's
But it
book.
could be. I mean, you know, if the economy booms, I don't want to talk it down. These are not the worst things you could buy.
Let's go hot.
I'm just laughing my head off because Paul's sounding like a lot of my clients at the moment. You know?
That's not
just
good.
Double my money.
Lost my mind.
You have lost your mind. Do you want to take a minute to regroup? Are you happy to proceed with the show?
No, but I mean, hot or not, this is what we've got to come
all right,
to.
and this is very difficult because it's like yes or no. So yes, if you're looking for a company that's going to consistently provide you with around about a 7.5% yield, growing at 7% per year. That's about it. If you're looking for a company where you want extreme capital growth, you want a huge income that keeps on growing tremendously, no, not at all.
So, in the current environment,
the
hot
current
or not?
environment, can I say neutral on this?
No, you can't.
All right,
No.
I'm going to say not.
Not hot.
Yes.
And Paul?
I'm going to say not hot too. I think the current mix just worries me a little bit with the potential for political fallout and interest rate movements and so on.